Hello everybody, welcome to the core content lecture. This one will be the final core content lecture and we'll be focusing on all of the concepts you have learned. This will be pretty much bringing everything together and simplifying it into a step-by-step system to properly utilize everything. So getting started with approaching the week. So coming into the trading week, the number one thing you want to identify is the higher time frame narrative. So things to ask yourself coming into the trading week. Number one is, where is the weekly candle likely to draw towards? And predominantly you want to use weekly or daily time frame gaps and liquidity to help you identify this. This is by far the easiest thing to look for whenever you're just coming into a week and you want to try to trade that beginning portion of the week to get alongside the expansion of the weekly candle aiming towards that target. And then number two is this week likely to continue or reverse from the prior week, which plays a part with true reversals. So true reversals are a higher time frame multi-stage cracking correlation, and if you had one in the previous week, then you can expect price to continue. But if you did not have one the previous week and price is showing signs of a reversal or nearing a reversal, then you can expect a new true reversal to form to give you that newfound narrative. So the second thing for approaching the week is going to be the economic calendar. The purpose of the calendar is identifying the high probability days of the week to have the best odds in your favor, as well as weekly halving theory and gauging high or low of the week for directional bias. And now gauging narrative. So if no clear signs of higher time frame narrative are present, wait for a timed true reversal to form. And this plays a part exactly with weekly halving theory and ties into the economic calendar. If you can pinpoint the low or the high of the week, let's say you're expecting Tuesday to be the low of the week, and it is a 3-2 split, and Tuesday is the only day within that beginning half that has news, you're expecting that to be the low of the week. And then if that day trades and then shows signs of an intra-week reversal, then you know, okay, price is likely to continue off of this reversal, and then you can hold that throughout the high of the week, going into the second half of the week. So when in doubt, stay out. So again, if no clear signs of higher time frame narrative are present, wait for a timed true reversal to form. So this would look a little something like this. So let's say we have a higher time frame draw on liquidity that is higher, and price action plays out, and Tuesday, being a day with news, forms a timed true reversal. So let's say there was a cracking correlation at the low end of the range and you're expecting the first half of the week to print the low of the week. So this gives you the bias or the narrative that price is likely to trade higher towards that higher time frame draw on liquidity. And then the next trading day, being Wednesday, has a day with news. So the prior trading day is likely to be high probability. So now approaching the trading day. So firstly, you'll have the night before. So influence of the previous daily close. So I'll often say we need to see how this day closes before getting any insight on something. And what I'm referring to is the previous daily close, whenever we're trading in the Asia session, is extremely powerful because it can tell you whether or not the higher time frame narrative is still being respected or if the higher time frame draw has been met. So whenever you're doing your analysis, you never want to do analysis in the smack, middle of the day. You don't want to be trying to predict what tomorrow is going to do during 12 p.m. You always want to wait for that daily close so you get as much information as possible. And another reasoning why this is important is it will tell you if another timed true reversal has formed, or a new timed true reversal that could flip the narrative or flip your bias. So things to ask yourself the night before a trading day is, where is price sitting at in terms of internal to external liquidity, being daily time frame gaps and daily time frame highs or lows, as well as 4-hour time frame gaps, and which daily profile is to be expected. So again, looking at what we have, if Tuesday formed a timed true reversal, showing bullishness towards a higher time frame target that's higher, then the best case scenario would be for price to trade into internal liquidity, being a gap that was left on Tuesday, being the London session retracement, and then a New York expansion happening on Wednesday. So going from internal to external liquidity, London session retracement, New York expansion. Now, if what you expected to happen come by the pre-market forms, then that leads us to the second topic of approaching the trading day, and that is pre-market. So the influence of a London session. So did London session retrace or expand? If London session expanded, then you would look for the New York session retracement profile into internal liquidity. But if a London session retraced into a gap, as what you saw in the previous diagram, then you would expect the New York session to expand. As well as if expansion were any gaps left that the New York session might use. And now things to ask yourself during the pre-market. So did a 2 a.m. 4-hour TPD form that is of use? And where are the draws of the session correspondent to the level of news being released? And what is the game plan going into the session? So the 2 a.m. 4-hour TPD tells you if a Kraken correlation is about to form specific to the daily cycle, which you guys already know. And then the draws corresponding to the news. That pretty much just tells you how volatile the day is likely to be and how big of an expansion you're expecting on that day. So now looking back at the diagram, if we see there is internal liquidity right here, London session retracing into a gap. So we're expecting New York session to expand, going to buy side liquidity. So let's say this was just an average normal news day, then London session highs would be a high probability draw on liquidity, and that would be of use for the expansion. And now finally, when it comes to approaching the trading day, you have the actual session. So observances during the session is using 8:30 volatility to see if price tips its hand to engage with the game plan. And then if that doesn't happen, using 9:30 volatility to see if price tips its hand to engage with the game plan. And then finally monitoring and journaling how you feel during the session and giving yourself feedback whether price is still likely to do what was anticipated. So what you're doing is you're looking at it through a step-by-step basis of, okay, at this time I'm looking for price to tip its hand in this way, and then if that doesn't happen, then I'm looking at the next time, and then if that doesn't happen, then okay, price likely isn't going to deliver as expected. So if we look again closely, we can see that when it comes to the game plan, this is something that you bring into the equation. So just like in the high probability setups video, you're looking for two things. That's it. You can bring those two things into the equation, whether it's a TPD and then a sequential SMT, or whether it's just a break of structure and then a retracement to a fair value gap. Whatever the case may be, you can bring this into the equation. So if we look a little bit closer, we can see that within that gap, within the price action, looking at the diagram, in a perfect world, we would have formed a sequential SMT and a TPD within the gap with London session. So this would have been the two things. This is enough. And then once that forms, you're looking for every reason to get alongside the run, targeting the buy side liquidity, which follows in tune with the higher time frame draw and the higher time frame narrative. And finally, looking at the summary. So what you're doing is number 1, gauging narrative, 2, selecting your trading days, and then 3, using all the information provided to make a decision during a specific trading time. So this is it. This is all you're doing. This is the core of what it gets broken down into. And then once you have this hammered down, all you do is just rinse and repeat over and over and over and over and over again. That's it. It's quite literally this simple. So hopefully you all found this one insightful. You have successfully completed the core content part of the mentorship.